I salute you guys. I hope you are doing well. Remember to subscribe to my YouTube channel and don't forget to share my videos. All pioneers, you must know this. We are going to look 20 risks when Pi coin will be listing on Binance, and I'll explain some of the most significant risks in more details. If Binance were to list Pi network, Pi, for trading, there would be several potential risks involved for both investors and the project itself. Here are 20 key risks with explanations. Risks for investors. 1. Volatility risk. The price of Pi could experience extreme fluctuations due to speculation, leading to potential losses for traders. 2. Liquidity risk. Initial trading may have low liquidity, causing large spreads between buy and sell orders. 3. Scam and fraud risk. Fake Pi tokens or phishing scams could arise, tricking users into buying counterfeit tokens. 4. Price manipulation. Whales and early adopters may manipulate the price by dumping large amounts of Pi once listed. 5. Regulatory uncertainty. Governments might impose restrictions or bans on trading Pi, affecting its value. 6. Exchange delisting risk. If Binance later determines Pi does not meet its standards, it could delist the token, leading to a sharp price drop. 7. Technical issues. Bugs or exploits in the Pi network's blockchain could create security vulnerabilities. 8. Network congestion. A sudden surge in transactions could overload the Pi network, leading to slow or failed transactions. 9. Smart contract risks. If Pi introduces smart contracts, bugs or vulnerabilities could lead to loss of funds. 10. Liquidity lockups. If Pi network imposes restrictions on withdrawals or transfers, investors may face difficulties cashing out. 11. Inflation risk. If Pi's supply increases significantly, its value may decrease due to inflationary pressure. 12. Fake airdrops and scams. Scammers could use the listing announcement to promote fake Pi airdrops, tricking users into giving away credentials. 13. Loss of trust. If early adopters dump their Pi quickly, it may shake confidence in the project and hurt its long-term potential. 14. Speculative bubble. If the price of Pi skyrockets due to hype and speculation, a sharp correction could follow, leading to losses for late buyers. 15. Exchange hacks. If Binance is hacked, Pi tokens stored on the exchange could be compromised. 16. Staking risks. If Binance allows Pi staking, there could be risks related to slashing penalties or liquidity restrictions. 17. Fake trading volume. Binance or other market makers may inflate Pi's trading volume artificially to attract more traders, leading to misleading signals. 18. Lack of real-world use cases. If Pi doesn't gain real-world adoption after listing, its value may decline. 19. Forking risks. A controversial decision by Pi network developers could lead to a blockchain fork, confusing investors and fragmenting the community. 20. Community division. If some users profit massively while others lose money, it could cause disputes within the Pi network community, affecting long-term growth. Would you like me to focus on any specific risks in more detail? I'll explain some of the most significant risks in more detail. 1. Price manipulation risk. When Pi gets listed on Binance, large holders, whales, or early adopters could manipulate the price by creating artificial buying or selling pressure. This could happen in several ways. Pump and dump. A group of investors might buy large amounts of Pi to create a price surge, pump, attracting new buyers. Once the price reaches a peak, they sell their holdings quickly, dump, causing a crash and leaving retail investors with losses. Wash trading. Some entities could repeatedly buy and sell Pi between their own accounts to create the illusion of high demand, tricking new investors into buying at inflated prices. Stop-loss hunting. Whales might deliberately push the price below common stop-loss levels, forcing traders to sell automatically, then rebuying at a lower price. 2. Regulatory uncertainty risk. Governments worldwide have different regulations on cryptocurrencies, and Pi's legal status remains unclear. Some risks include exchange restrictions. Binance might be forced to delist Pi in certain regions due to regulatory pressure. KYC/AML compliance. Authorities could impose strict Know Your Customer (KYC) and anti-money laundering (AML) requirements on Pi, making it harder for users to withdraw or trade. Security versus utility classification. If regulators classify Pi as a security, like stocks, instead of a utility token, like Bitcoin, it could face heavy restrictions and legal action. Government bans. Countries like China or India might ban Pi trading, limiting its adoption and liquidity. 3. Liquidity risk. Liquidity refers to how easily Pi can be bought or sold without affecting the price. If Pi has low liquidity on Binance, it could lead to high price slippage. A large buy or sell order could significantly move the price, making trading inefficient. Difficulty selling large holdings. If demand is low, big sellers may struggle to exit their positions without tanking the price. Market freezes. In extreme cases, a lack of liquidity could cause Binance to temporarily pause Pi trading, preventing users from buying or selling. Would you like me to expand on other risks, or do you have any specific concerns about these?